All right. Welcome everybody to a weekly outlook for gold. So we've got CPI this week for the dollar. It's going to be a big week. So we want to be prepared for our week ahead. So I thought I would start to post these weekly breakdowns. I discussed it on the stream last week and we actually did a nice higher time frame breakdown to kick off last week. And I'll touch on some of those ideas again here today. Um, that was obviously the monthly breakdown as well. So if you do want to see that, the first stream from last week, we did a nice breakdown. But like I said, we'll cover some of those things again. And let's kick things off here. So I will start off with saying, coming into the week, I am more interested in the sales. And the reason being is let's build up that story. So I've obviously looked at the market. I've built up the story of what price is telling me, as well as tying it in with what's going on with some of the fundamentals. Obviously, we have CPI coming up this week. So I'm just going to zoom out here, and like I say, this is basically what we were discussing last week. So once we've zoomed out and got this macro perspective on gold, coming into the beginning of a new month, looking at the monthly candles, trying to get an idea of what this coming month's candle is going to do, possibly, I find is quite powerful, even as a day trader or scalper. So, of course, monthly time frame, even if you have a bias on the monthly time frame of being bearish, doesn't mean that you can't take buys in your session. So we will obviously discuss some of those buy ideas and build up a case for the buys as well. But what I can see here is we've come up into these all-time highs basically 3 times around 2070. And this is the third time we've revisited this area. So each and every time we've revisited 2070, let's call it, these highs, we've had a fundamental catalyst. We've had fear, uncertainty, and doubt in the market at that point in time. So we came up into these highs with COVID, once again with Russia, Ukraine, and I'm not going to dive too deep into all of this, but we've come up into this level again with the banking crisis to start the year in March. Now we can see that all of that dust has started to settle, and we've had a nice rejection there on the monthly, but it's tough to say what's going on here right now because these monthly candles are printing side by side. But just going based off of the fact that we are still coming off of these highs, still trading below 2000 key psychological level, my idea was for this monthly candle to potentially fill last month's wick. Now that's what we were discussing on the stream last week. And I said, even though these weekly candles were bullish, do not be surprised if we do not see breaks above 1950, also key psychological level, and if we see this weekly candle closing bearish. So now that we've got this weekly candle closing bearish, just reading the candles, what makes the most sense? To me, possibly seeing a wick up here to something like 1930, even 1935, and then just looking for that continuation to the downside. Understand if CPI is coming out in between the forecast and the previous, so kind of coming out mixed, giving mixed signals, we may not get necessarily clear one-sided direction, and you may not get a strong candle body closing bearish, but this is what I would like to see, is this weekly looking something like that, coming back down into these lows. From a technical standpoint of view, that makes the most sense here. But the thing is, we don't just have technicals in play. Of course, we have that CPI coming up. All right. So based off of the weekly, that makes the most sense to me. Now looking at the daily, what we can see is that we have formed a support here around 1916, 1915. We could even move this support to the left and call it 1914. So essentially, we can see these rejections of 1950, you're still coming down quite nicely. This structure on the intraday time frames right now is bearish. We formed new lows and we are forming lower highs, right? Pretty straightforward. But what I don't necessarily like coming into the beginning of the week is that we are actually just in this range. So when you're coming into a big fundamental event, oftentimes we may range for the day before or a couple days before. Now, as you can see, we have actually been in a range here since Wednesday. Keep in mind, it is a pretty big range. You should potentially be able to find trades within this range, but as it gets choppier and choppier, the longer you stay in this price range, it's going to be more and more difficult to trade, especially as you come into CPI and have lower volume and volatility. Now, some trade ideas for early in the week is, we may not have the volume to actually get clean breakouts of this range. So if you do see price coming into these lows at 1916, maybe even get a fake out down to 1914, and then, price trading back above 1915, you could look to potentially play the range. Don't expect moves all the way back up to 1930. Maybe looking to move back up to 1920 there. So something like that. And then likewise, if you do come up into the highs of this range at 1930, and let's say you see rejections, don't have the volume to break above, early in the week, you could just be looking to play this range like this as well. Now, I'm not a big fan of taking trades in a choppy range like this leading into a big event. I would rather wait for cleaner ideas, and those cleaner ideas would be for buys above 1928 or 1930. Now, a level I want to be careful of here is 1935. But if we have enough volume to the upside, so this may be an idea after the CPI, if that CPI is more bullish for the dollar. So if numbers are lower than the forecast, lower than previous as well, then, we may see moves back up to 1945, even 1950 here. Like I say, just be careful of 1935 there. And then I did mention if we got breaks below 1915, and you fail to hold above, you could look for the bars back in this range. But like I say, overall, I would rather stay out of this range. And if you can get breaks below this zone and hold below 1915, then we could be looking to come into 1910. But from the weekly perspective, I'm looking to target 1905. Let's just zoom out a little bit here. So 1905, you can see that rejection there, and then also here to the left. 1905, 1900, 1900 could be your target, but we've seen a lot of rejections from 1903 and 1905. So that would be basically my main target there for sales for the week. And then looking to see if we can break and hold below the 1900s level to move back down into these weekly lows at 1890, as discussed with that weekly candle diagram there, as I drew out. So below 1915, these cells should be pretty clean down to 1905, possibly even 1900. Maybe difficult to hold runners all the way to 1890, but overall weekly targets would be 1890. So those are just some key levels to be keeping an eye out for. And then, like I say, for the buys, it's going to be pretty tough here. I wouldn't be surprised if you came back to retest, since this is essentially a range here. Um, I wouldn't be surprised if we even saw something like this, a break above 1930, retest at 1935 and reject there. So be careful with the buys coming into this week. Like I say, if you have that CPI coming out lower than the forecast and lower than the previous, so I don't have a forecast here yet, but let's say lower than 3.2, showing improved inflation, showing that the Fed, or giving hopes that the Fed may even cut rates in 2024, that's going to lead to dollar weakness. So we go and have a look at the DXY. You'll see here that the DXY is extremely strong. It's got a lot of momentum to the upside. And we're coming up into a very significant level, 105.5. So as we come up into this level, it's very easy for us to see rejections here as buyers begin to take profit. So I am expecting to see pullbacks at some point here on the dollar, but I wouldn't want to be betting against the dollar. So I wouldn't want to be buying gold at the moment where there's no real confirmations, right? But if we do get negative news for the dollar just being at these highs, then we could even see a more aggressive pullback and a little bit more aggressive buying power there on gold. So just keep that in mind when it comes to the DXY as well, what's going on there. We're extremely bullish here, but if you do get negative news for the dollar, which would be an improved CPI, then we could see quite a hard pullback here, and then those gold bars may make a bit more sense. So other than that, guys, Monday to Friday will be the New York session as normal this week. So CPI on Wednesday, going to be a big one. You guys won't want to miss it. I'm excited to see you guys there. If you're new to the channel, hit the subscribe button so that you don't miss the streams this week or CPI. I'll see you guys there. Take it easy. Safe trading.